Hello traders and welcome to another video review. Today is Tuesday, August 29th, 2023. Let's find out what's going on the Forex economic calendar. As you can see, the very important data releases for today are all scheduled during the New York session, and those are CB consumer confidence, job openings, and Fed Chair Powell speech. All of them are scheduled at 4 o'clock and 5 past 4 o'clock p.m. If we add more data to the calendar in form of the, let's say, medium important data releases, so what we got here is of course the data from, there you go, data from the JFK German consumer climate. Those data were published already, and there's big deterioration in the consumer climate from minus 24.6 to minus 25.5, which is more than the forecast of minus 24.3. Moreover, we will know the European Union economic forecast at noon, and the ECB President Lagarde is giving a speech at 1 p.m. A little bit later, at 3 p.m., HPI composite index will be released, and 10:30 API weekly crude oil stock data will be released as well. So there are some data scheduled for release during the London session as well, but they are not that important as the bunch of data from the USA. This importance is on the high level. So that's the calendar for Tuesday 29th of the August. Let's find out what is going on charts, and we are going to take a look at the US dollar to the Swiss franc first. For our chart of the US dollar to the Swiss franc is showing us a very nice movement to the upside. If we zoom out, we can clearly see that there is somewhere a clear technical resistance. This technical resistance is of course located at the level of 8,819. So that's the level. This level had been violated already. It worked as the technical resistance, but it was violated, and now it provides the support for the market participants. The next level here, very important long-term level, is located at 8,900 exactly. So this is the red line, because it's a technical resistance. So where are we right now? We are bouncing from the key technical support at 8,800 and let's say 20. Let's say, okay, that's the technical support, long-term technical support. The market hovers around the 50 periods moving average and 100 periods moving average. So there is still a chance for another rally to the upside. If we apply our horizontal levels, one of them is 8,874, which is of course the technical resistance, local technical resistance. So the outlook right now, let me just take my arrow. So the outlook right now is of course to the upside. So basically it works. Let me just grab the some arrows. The outlook is right now to the upside, as long as we trade above 8,820. In case of a breakout lower, we might see some deterioration even towards the technical support, which is located here. This is the key technical support below 8,820, which is located roughly around the level at 8,699. Momentum is still positive. It just bounced from the level of 53. So the outlook remains bullish, but any deterioration lower below the level of 50 would likely end up this kind of a movement to the upside, and then of course downside movement would happen. So that was the US dollar to the Swiss franc. Let's take a look right now, because there's plenty of data from the US. Let's take a look at the SP 500. This is a 4-hour chart, and what is going on the 4-hour chart? So we got established the main range here on this market. So technical support 4,336, and the technical resistance and the yearly high at 4,612. Okay, so that's the range. Recently we've made a bounce, ABC bounce towards the 4,447, so that's the resistance as well. Let me just put it like this. We went lower, right? We went lower towards the level of 4,356, so this is the local technical support, and now we are bouncing back up again, but the market is between 50 and 100 periods moving average with slightly positive momentum. Let me just place the level of the line at the 50. There you go. So you can see it hovers around the level of 50, right? So we've been below the level of 50, extremely oversold, then the first attempt to break out, then the breakout, then sharp reversal, and now we are bouncing back up towards the next target, which is of course the moving average, or the level of 4,476. Local technical resistance is still present here, so I think that maybe we should apply it to the newest data and change the color to the orange, so you can see, guys, that this is the key technical resistance in form of the trend line. So that's the dynamic resistance. We are still trading below it, and what is really very particular in this movement to the upside is that the recent move from the lows from here was made basically in, let's say, in 3 waves. Okay, so that was something like that, or maybe it was ABC, X, ABC. It might be a complex correction as well. Nevertheless, the point is that this movement here is a corrective in nature. All right, so we got the ABC and the local technical resistance line. If you can apply it here, you can see it straight on that it might be placed like this. So we got the breakout. Now we can test it. Let me just apply it a little bit more careful. There you go. Something maybe like this might be good. The point is, we are trading below this this level right now. We are still in the corrective mode, and anytime now the market can reverse and continue this movement here, this movement to the downside. So let's just wait which of these levels will be the one that will make the market move lower. So that was the S&P 500 index. Because of the API crude oil stock, let's just take a look at the crude oil as well. Let's use the daily time frame chart. It might be kind of important to see what is going on here. So the local high and the swing high was made here at the level of 84.88. Since then we are moving lower. Let us investigate what is going on here during this down move on the daily time frame chart. Let me just zoom in a little bit more. So what is going on here? The first thing is that this is kind of a substantial movement to the downside in terms of the percentage. Okay, so we are still under the bearish pressure, and now with this trend line on daily, it's very, very clear. There was a bounce, rejected. There was a bounce. It looks like rejected yesterday. A red candle just right on the 50 periods moving average. So right now we should continue to the downside, and the momentum is, as you can see here, let me just put the arrow here. The momentum is moving lower, so the momentum is down as well, and getting towards the extremely oversold conditions. Right now we are hovering around the level of 50, but the market participants might be simply waiting for this level to be violated, 77.62. Then of course we will go towards the 100 periods moving average, 76.84, and then we are done with this up move, the recent up move, because the next technical support is of course important, as any of them is. So this is the technical zone, basically the demand zone that was previously supply zone. So this is the very narrow zone of the demand. Well, we might use this one level. Sorry, this level as well, between 74, basically it's 73.84, and this is the 75.03. So first this low, then 100 periods moving average on daily, then that zone. If we break below this, then this, of course, movement to the upside is most likely done. You can see it straight on that there is an overbalance between price and time. So that movement to the downside is no longer a part of this upward cycle, and we should be prepared for another down move here. So what is the next movement? The next movement is to the downside, somewhere here, somewhere in that zone. This is where this market should go if there is no breakout above the short-term trend line to the upside. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.